Kia ora, I'm Mary Jo, Kiwi Bank economist. So the saga of New Zealand's hot housing market continues. According to the latest Real Estate Institute housing market report, house prices grew by a massive 5.2% in February alone, and prices are now over 20% higher than they were a year ago. And these are outstanding numbers. And at the regional level, it's the same story. In regions like the Bay of Plenty, the Hawke's Bay and Wellington, annual house prices grew by a whopping 30%. Auckland's back at 20% growth, and regions across the South Island are also posting double-digit rates. So it's a hot market wherever you look. Now, we also saw a jump in sales activity with nearly 8,000 sales recorded last month, and that's the highest for a February month in 14 years. Now, this jump in activity may have been spurred on by the fact that the LVR restrictions will be tightened further on investor lending. So giving bank 90-day pre-approval lending, this front-loading in anticipation of these restrictions being tightened may explain the flurry in activity we saw last month. Now, the LVR restrictions have been reinstated with the intent to cool the housing market. But the rapid rise in house prices has only boosted the equity on investors' existing portfolios. Equity that can be used as a deposit for additional borrowing and for further investment. So the LVR restrictions may not actually have as much of an impact, a cooling impact, as initially thought. Debt-to-income ratio restrictions on investor lending would be more effective, and it's something the Reserve Bank has asked the government for to have in its macroprudential toolkit. Now, along with possibly giving the go-ahead on DTIs, the government may also look to extend the Bright Line test on the sale of investment properties or introduce new schemes like rent-to-own to assist first-home buyers specifically. Now, tinkering with demand should help to take some heat out of the market. We expect to see house price growth start to slow down in the second half of the year, but still remain elevated at around an annual rate of 14.5%. Now, a problem with the lack of affordable dwellings is not on the demand side. You see, there's simply not enough supply. The last time we checked, we have a shortage of around 80,000 homes. And even with a booming construction sector and the fact that we're building houses at the fastest rate in 40 years, it's difficult to make up for that shortfall. You see, we could be building houses much faster. And the problem here is largely around regulation. Because of all the restrictions that exist, it's been difficult to get the consent to build. And that's the problem. But this is where the government can step in. They control regulation, so they can come in and unlock land supply for development. There's no doubt that ramping up the supply of housing will have a more meaningful impact in solving the housing crisis. It's Economics 101. So that's it for this weekly wrap. I'll talk to you in the next one.